Well, breaking information coming in. The Reserve Bank of India cuts repo rate by 0.25% to now, that now stands at 5.15%. That's the repo rate as of now after the recent cut. Fifth consecutive rate cut this year is what we're reporting at the moment. Let me bring in Avni Raja for more. Yes, Avni, if you can help us understand what prompted the RBI to slash the repo rate and what does it mean for the common man?
Well, Afrida, it was expected, the RBI was expected to further cut the repo rate by 0.25 basis points. This was, of course, this is the fifth rate cut that we're seeing this year. Remember, this comes in line with the government's measures to boost the economy. We are in an economic slowdown at this point, and several sectors are facing a lot of issues in terms of facing the heat of the slowdown. So this was really expected. Essentially, what it means is that cheaper EMIs now, because also remember, the other key point here to remember is that also from the 1st of October, the new rules put forth by the RBI to set interest rates for loans given out by banks, that also comes into effect. Essentially, these new rules will mean whenever the RBI cuts rates, it will automatically translate into cheaper rates for people who take loans. Now, the other very important point, Afrida, to mention here is that the RBI has further reduced its GDP growth forecast to 6.1%. This was 6.9% in the last policy meet, but now it has been reduced to 6.1%. And RBI says the demand conditions continue to remain weak. It also goes on to say that financial markets are still volatile, and since the last policy, global economic activity has weakened further.
Right. We'll have to leave it at there for now, but we will come back to this issue. Thanks very much for joining us.